Good evening, all. Hope you're doing well. We are in a state of caution right now. The technicals have fallen. The VIX has really pumped. I'll be absolutely honest. I'm not sure what has caused that. The indices aren't exactly going to freefall mode. If you come to the indices, they're not that bad. Change. The VIX is really pumped, but then Bitcoin's up a lot, and Nasdaq's positive. It's a bit of a strange one, really. Yeah, so a little bit of red creeping in. So I don't know if this is legit or not, so you've got to be a bit careful. If anything, I'd probably say that this would be by the dip opportunity because, we're at the big picture green. Yesterday we were green, and today they have sold, which we can see on Monday on the German 40 and also France 40 as well. They've actually gone quite bearish on those two. They've also shorted EG and EJ. They've gone long dollar Swiss, slightly long oil, slightly long gold. They've also shorted the S&P 500. But I'm going to make this like a fairly quick video because there's not that much to say. But what is of note are the indices. So S&P is obviously like the granddaddy. It's what we need to really be focusing on. And see what happened is that they've gone less short, but it really is kind of sideways, to be honest, with the S&P. Because they've gone less short, we've actually created a box above, and that means less short is essentially what that tells you is that they were short, but they've had to get out through massive losses, and by that action, it's long or less short. Okay, so it's less short. It's actually a bearish scenario because it's just the way it works. So when they go long, it's a sell, and when they go less short, it's a sell. Okay, so that's that move there. So, but the trouble is they're likely going to sell it. But let me show you US 30, and there. So we can create a box. Yeah, it's just there, isn't it? So it's of note because what's happened, this is the first time this has happened. We've had a decent crossover since there. So it's a little while ago, yeah, it's a week ago. And they had us sold really heavily, very with much conviction since the 6th, which is, oh God, that's crazy, isn't it? Last Monday. And the thing is, they'd gone long or less short, but then they added short. Them adding short pushes price higher. So we don't want that to happen. Really, it'd be nice for this to have a nice move to the downside. Then we can look to buy the dip. Then we can try and get some profit out of this. But you wouldn't really necessarily want to be buying up here. You want to be waiting for the retracement in order to get a good entry. So what probably likely going to happen is that we see this less short. I think we might see a repeat of this where they went less short, but they added short, less short, and then they, of course, it makes sense. This is going to fall, right? They're going to want to sell it because one, they're really short, and two, they're not looking at the sentiment. They're just looking at the technicals, and they're like, this is actually maybe fairly bearish. We've got 4 hours of bearish candles, could be a good short. And they're going to place their stop up here, right? Like an obvious place. And so they're going to sell it with a stop here. And then, of course, it wants to come up and grab those stops. And them selling it is going to create a demand. And, of course, we'll pop high. Now, the thing is, if they don't sell, then this is going to fall. Okay, so it all depends on the dynamic flow. Okay, so today is of note because it was all the way down to Monday. Since we've actually had anything interested. Tuesday, Wednesday, Thursday, Friday, they just sold, they'd sold, they sold, and then here they're going less short. So those guys who shorted here but getting blown up, basically, and that's what we're seeing right now, sideways on DAX. Okay, let's look at gold. And where are we? And I can't find it. Well, there it is. God. And the robot's okay. We've got a trade open. It's the Euro USD. We've got a long. And let's draw some boxes on here. And I guess that's really it. So stay tuned for tomorrow's video. But I think what's going to probably happen is that they're going to be quick to sell because the price is falling and they're going to want to sell it, aren't they? So let me see this crossover. Yes, here, I think. Yeah, it's this one here, I think. This is quite tricky because sometimes the shift in the sentiment goes over like 2 hours. Yeah, this it's really tricky. I'll do this one. I'll just do this one. I think that's about right. And so that's fine. And we can create a box here from where they'd sold. So we obviously we pumped. And like I said on Discord, right? This move here doesn't look that crazy, but it's actually a $15 move. Now, if you're trading on a normal size with good risk management, it's likely that would have just crushed you. You know, unless you were anticipating a complete 180 degree reversal, and then you bought back into the area, but you wouldn't know you were creating an area unless you had the sentiment with you. So you could have entered in there, and it could have done a lot of damage. So there's 2-3-2-7, say 2-3-12. This is horrible. So that would have been pretty nasty. If you were manually trading, you know, on a respectable size, that would have been pretty horrific. But at least you understand why, you know, we had a reaction. It's because they'd sold and they can't be allowed to profit. So that's the important thing to remember, is that when they sell, it creates a demand, and when they buy, it creates a supply, but they can't be allowed to profit because there has to be an entity who reverses the herd, and that entity doesn't want to be undergoing losses, you know, because this wouldn't be good business. And so that's that. So the robot's going okay. The aggressive bot had a license issue with the robot, but it's now been fixed. I've been chasing the developer all day, and it's now fixed. But that's fine because it's not going to impact anyone at all, because no one's got access to the aggressive bot. Everyone's got access to the passive bot. The aggressive bot, what it just accumulates buy and sell positions based on technicals only. And then over a period of time, we have a breakout, and then we profit. But what we don't want is to see a breakout and then a fake breakout, and then, because that would just be horrible before the bot. And so that's what I'm going to be doing on the testing. So I've been a little bit quiet recently, just examining price action, debating whether or not the Euro USD is the best pair to trade. It probably is because we got a zero spread. It's very liquid, and you know, it's going to move, isn't it? Once we get like the catalyst, it's going to move, and it's not too volatile either. So, like for example, like pound, New Zealand dollar, it's very volatile, for example. So it probably is the best pair, but it's not really behaving nicely right now. And perhaps we can come to the Euro USD, because I did do some chart analysis. So what happened? Oh, that's interesting. Look at that. Can you see that respect there of this? Let's do this. So basically, we just created a, you know, like an N, and that was the buy. And I'm probably gonna have to tighten this chart up a little bit, but it's saying that we may hit some diagonal resistance up here. And so we've got a big old pitchfork as well. So we probably should be somewhat bearish below that diagonal. So you might want to come up to that diagonal maybe. And I'm not sure if the 4 hours is the best time frame for this. But what had happened is that see that B is the pitchfork lower, and it just hit it completely on the dot. So that B is of note, and we're above the B, which is 107.28. So really technically okay, but we're below the pitchfork, we're below that diagonal. However, we made a bullish harmonic. So we are very undecided right now. We don't really want any fake breakouts for the bot either. So for example, let's see. So yeah, perhaps that might have been it there. For example, we had a breakout here. Yeah, that would have been a naughty one here. The bot would have profited, but then it would have accumulated some buy orders, and then as that moved there, that would have stopped it out. And unfortunately, I thought we were going to be back in that range again. So we know we just have to carry on testing the bot. The passive bot's going fine. The aggressive bot has got great potential, but we don't want any naughty nonsense. And we've got PPI tomorrow, and then we've got a Powell speech, don't forget, and then we've got CPI on Wednesday. I think on Thursday we'll have a clearer picture. However, see on the 4-hour chart that we are sort of trending higher. We've got a bullish harmonic, but we are below that pitchfork and we are below that diagonal. So we may come up to here, potentially 108.70-ish, and there'll be some stops up there as well. So trade safely. The indices are potentially going to wobble tomorrow. And if they do fall, then that would be good, because we'll have a two-way market. And then we can have a nice dynamic where we can look to enter. There's no point entering now on the indices, because they just completely, they need to take a breather. It's just the way the market operates. So hopefully there'll be some opportunities for us, but we'll need to see that wobble and then the fall, and then we could hopefully see some continuation on that decline, and then we can see a little, a good entry point for our longs. So we'll have to wait and see what happens with the Euro USD, but it might be worth just making an eye on that 107.43 and then 107.25. Look at the respect on that. Okay, obviously a big key support level. So above that should be okay. And don't forget we got this B level as well, 107.20, which also coincides. Well, it's a little bit below that, but it's definitely a strong level. So that's an important level. And there's an important box there as well. So like I say, trade safely. I'll be back tomorrow, and it'll probably coincide with about the Powell speech, and then we can just do a wrap up tomorrow, can't we? And I'll speak to you soon. Risk disclaimer: for anything that you do in the financial world is that you will need to use very strict risk management. So if you don't have the risk management in play, you're pretty much gambling, okay? And we really want to be looking at trading, and we want to be looking at risk to rewards. And in order to get a good reward, you need to define your risk. And if you don't know where your stops are, if you haven't defined your risk, then you could end up losing all your capital, okay? So you need to know where your exit is, and then by knowing that, then you can forecast your profit. But if you're entering willy-nilly based on some information that you found on the internet, and you've entered without knowing where your stop is, you're going to encounter huge losses. So just to say is that it carries a huge level of risk, and it may not be suitable for all investors, and past performance is not indicative of future results. Okay, so it's a quick disclaimer there.